What does bank failure even mean? When a bank fails, it means it runs out of money and can't give people their deposits back. But how does that happen? Let's break it down with Doodles. Banks don't keep all your money. When you deposit money into a bank, they don't just keep it in a vault. They lend it out for mortgages, car loans, businesses. They keep only a small percentage in reserve, called a fractional reserve. The problem: everyone wants their money back. If too many people show up at once asking for their money, a bank run, the bank simply doesn't have it. They're waiting on loan payments, not sitting on stacks of cash. Why would people panic? Rumors, bad financial decisions, or a shaky economy can make people lose trust in a bank. One person pulls their money, then another. It spirals. Confidence is everything. What happens next? If the bank can't meet withdrawals, regulators may step in and shut it down. This protects depositors, prevents more panic, and allows for an orderly resolution. Enter the FDIC. In the U.S., the FDIC, Federal Deposit Insurance Corporation, guarantees up to $250,000 per person per bank. That means if your bank fails, the FDIC will reimburse you, usually fast. What if you had more than $250,000? Anything over $250,000 isn't guaranteed. Sometimes it's recovered during liquidation, sometimes not. This is why large companies and wealthy individuals spread their money across banks. Real-world example: Silicon Valley Bank, 2023. SVB collapsed when too many tech companies tried to withdraw money at once. The bank had invested deposits in long-term assets that lost value as interest rates rose and couldn't keep up. How does a bank actually fail? A failed bank's assets like loans and securities are sold. Another bank may take over accounts. Customers may get new debit cards, but the transition is usually smooth, especially for insured depositors. Is my money safe? If you're under the insured limit and banking at a legitimate, FDIC-insured institution, your money is very likely safe. But it's always smart to stay aware and not keep all eggs in one basket. Why it matters to you. Even if your bank is fine, bank failures shake the economy. They affect trust, stock markets, borrowing, and business growth. Understanding how it works helps you stay calm and smart. Final thought: banks work on trust. The moment trust disappears, even a strong bank can collapse. Learn the system, and you'll never panic in a financial storm.